Steve Penny from the silverchartist.com joins us today to talk about silver and gold support levels. This and more on this week's episode of Metal Money. I'm your host, Patrick Vieira. Steve Penny, welcome back to Metal Money. How are you doing?
I'm doing great, Patrick. Thank you so much for inviting me back. It's always a pleasure to speak to you.
Glad to have you back on. Appreciate it. You know, Steve, on August 11th, you tweeted, $22 silver is indeed very strong long-term support. Fundamentals, technicals, sentiment, commitment of traders, data, etc. all suggest $22 is likely to hold. However, we should be mentally prepared for the outside in asterisk possibility of yet one more flush lower. Steve, can you go over what you meant by this tweet?
Yeah, absolutely. I'd be happy to. I try and avoid making bold predictions with like absolute certainty because, my crystal ball is broken and really there's no one out there who knows the future with absolute certainty. So I try and tell people what I think while leaving, the outside possibility open that I'm wrong. And of course, I'm wrong from time to time. So what I was trying to communicate there in that tweet is that there is very long-term support at $22 in silver. There's no denying that. That's quite obvious. Even if you look at a 10-year chart, you'll see very strong horizontal support right at $22. Now, if that were to fail, which I do think is relatively unlikely, there's an outside chance that we could pull back towards like $18 or even $19 silver. I don't expect that, but I think we should be mentally prepared for that.
Okay, so if it breaks 22, next support levels would be about 18, 19 for silver.
Yeah, I mean, you could find support at like 2150. Even numbers like 20 would probably provide some support, but I think 18 to 19 is probably like an outside far worst case scenario. Not expected, but something just to keep in mind as an outside possibility.
And so in that tweet, I noticed you had asterisks around the word outside. I'm kind of curious, what did you mean by outside?
Well, I just didn't want to give the impression that I think it's likely that we pull back that far. That's all. I was just trying to emphasize the word that it's an outside possibility, not so much like a prediction.
In our last interview, you mentioned precious metals were about to lift off. Has the recent price pullback affected your forecast or changed your forecast?
Absolutely. As a technical analyst, you have to react to new information and not be, so rigid in what you had previously thought. So, I didn't expect this 1 year pullback in consolidation to last quite this long or to pull back quite this deep. I didn't, to be honest, I didn't fully expect this. However, for a couple months now, we had been saying that we thought 2375 was likely, a pullback to 2375 silver was likely, and 22 was the more outside possibility. So what this has done, there's been technical damage inflicted on the charts. There's no denying that, but that doesn't affect the overall long-term thesis of the sector. But what it might do is just kind of delay the price targets that we had been looking for earlier in the year, like $50 silver. That day is coming. I'm very confident of that. But when you get a sharp pullback like this, it typically takes a little bit of time to repair the damage on the charts, carve out a new base, and then you kind of resume the uptrend from there.
Yeah, that was going to be one of my next questions. Where is the bull run? Is it over?
No. So I'm one of those people. I'm not a purely technical analyst. I like to look at the fundamentals too. In fact, the fundamentals are what got me into this sector. So I like to say fundamentals tell me what to buy, technicals tell me when to buy. So from my perspective, I will remain bullish on the metals in this sector until and unless, the reckless fiscal and monetary policy that pervades almost all central planners and governments around the world, unless that changes. And obviously that's highly, highly unlikely. The short-term pain would just be too much, and the blame would come back on these politicians. So I expect them to continue to debase currencies, and as long as that happens, the bull market is going to remain intact from my perspective.
We're seeing a lot of political viewpoints coming out, and it's not things that are making people very happy right now. And what have you observed about people's sentiment towards silver right now? Are you seeing more of your followers becoming a little bit disillusioned over silver's potential, or have you seen more people sort of throwing in the towel? Is there blood in the streets?
Yeah, I'm not sure I'd say there's quite blood in the streets yet, but yeah, sentiment is low, and sentiment, I wouldn't quite call it rock bottom, but this saddens me because it's the very nature of a bull market is to shake loose the very, people who should be hanging on, to shake loose the maximum number of retail participants. That's why they call it a bull market, because bulls try and shake people loose. And, the smart money, I believe, is buying these dips, but unfortunately it's, the newer retail investors who are getting shaken loose.
How about past bull runs? Do they offer a clue as to how much further this current bull run might last?
Yeah, they do. So if you take the average of the last two bull markets from 1970 to 1980, and then 1999 to 2011, they average about 10 years. And I mark the beginning of this current bull run as December of 2015, or you might say January 2016. I mean, it's within a week or two there. So if you say January 2016, that's January 2026 gives you a 10-year bull run, and that would be the average of the previous two. So that's kind of a rough guideline that I have. I'm looking for a peak somewhere around 2026.
And Steve, I often ask people this question. Why do you feel silver is under so much pressure?
Well, the metals markets are very forward looking. I think all markets are forward looking, but especially gold and silver. And I think a lot of general market participants are anticipating taper and perhaps the beginning of a rate hike cycle earlier than most had originally thought. Now that taper could actually happen, but as a precious metals bull, that's not something to be feared. What's actually interesting is it's the time leading up to those events that the metals come under the most pressure. But then when they actually happen, that tends to mark like major bottoms in the metals. For example, the first rate hike after the 2008 financial crisis was December 2015. And that marked the bottom for the metals. And they actually got a couple rate hikes in, but that was the low for the metals. And silver and gold had really nice rallies once those rate hikes ensued. So, actual taper, actual rate hikes are not something to be feared. It's the anticipation that we have to get through.
Okay, and when you're doing your TA, your technical analysis, is there any chart pattern or what chart pattern has the most of your attention of late?
Okay, well, on the shorter term for gold, this is really encouraging. Last week on the weekly candle, we printed what's called a bullish hammer, and that came on a pretty high volume. So we had this big long tail. So price sold off right down to support 1675. I think the low tick was 1677. And then we spent the week rallying strongly, and we closed with a green candle. So up like $20 on the week, or maybe $15 on the week, and above the primary uptrend line that goes back over 2 years. So that's very encouraging in gold. So that's, could we come back and revisit those lows one more time? Sure. But I think that adds to the case, the bullish case that the lows are in.
Okay, and for gold, do you see any new support and resistance levels?
I do. There's quite a few. So the big ones to watch are the 200-day moving average in gold. That's the first step towards confirming a technical reversal. We'll be getting back above the 200-day moving average. That 200-day is sloping downward, so it's getting a little bit lower each day. But currently, as we speak, it's 1816. So getting above 1816 would be the first step. And then the next step would be making a new higher high above, let me see the exact number here, 1837. So if we get above 1837, that would break the series of lower highs. And then we could start to feel pretty good that the lows are in gold and that we can expect higher prices going forward.
Are we in any sort of an upward trend, downward trend, or are we really just headed for some sideways action?
I think sideways action is more likely, but whenever you talk about trend, it's important to define the time frame. So if you zoom out to a longer term time frame, yeah, we're in an uptrend. If you zero into a couple months, yeah, we're in a downtrend in the shorter time frames.
Steve, if you don't mind, I'd like you to pull out your 1-year silver chart and then your 1-year gold chart, and if you could go through it with us.
Sure. Yeah, I'd be happy to share my screen and show a silver chart and maybe one for gold if you like. Yeah, so this is a chart for silver going back to last August. And there's really no clear patterns here, but one thing you can see is a gently rising uptrend channel going back to August of last year. So you can see slightly higher highs and slightly higher lows. And we just bounced right off the lower rail of that channel, if you want to call it that. And you see the 200-day moving average still sitting all the way up here at 2590. So getting above that 2590 200-day moving average is going to be key. And of course, the big resistance is $30. Every silver investor should know that $30 is key resistance. And once we get above that $30 level on above average volume, that will likely signal a resumption of the uptrend, and we'll probably see $50 silver sooner than many people think once that $30 silver is cleared, which could take a little bit of time.
Okay. And do you also have a gold 1-year chart?
Sure. Yeah, absolutely. Here's a gold chart. And this is pretty encouraging here. These are daily candles, and you can see this triple bottom right here at 1675. Came down and tested that to within a few pennies 3 separate times, and we've rallied off of it. So that's encouraging. But like I said, we've got some resistance to get above too. We've got this 200-day moving average and then this recent high here at 1837. Getting above there will signal a resumption of the uptrend, 1837.
Steve Penny, I appreciate you sharing those one-year charts of gold and silver. And I really hope we can do this again soon. And hopefully we'll have more green candles next time around.
You bet, Patrick. Thank you. Thank you so much.
That was Steve Penny offering his technical views on the short-term price action for both gold and silver. As always, please leave your thoughts in the comment section below and remember to keep it liquid, keep it real. And I'll see you on the next episode of Metal Money.